Hitesh Oberoi, the MD and CEO at InfoEdge, is joining us on the show. Hitesh, hi, good to be speaking with you. Let's begin with the recruitment business as always, Naukri and the IT services, because I was just going through the JobSpeak index and finally after 15 months, there's sign of a green shoot there. Would you call that it's the bottom and we are now in the growth trajectory for IT services recruitment?
You're absolutely right. We've seen some growth come back to IT hiring, and our index has moved after a long time. We are bullish, and we are hoping that this will sustain for some more time, but it's early days. So let's see how this plays out over the next few months.
Right. Hi. Good afternoon, Hitesh. This is Cheryl also joining in the conversation. And if you look at your non-recruitment business verticals, especially if you look at the real estate vertical, good growth coming in actually for that particular segment. But do you think that this sort of an uptick will continue going ahead for especially the real estate segment? And is this an indicator of what exactly is happening in that space at the whole?
Our real estate team has executed really well for the last 7-8 quarters now. The market has also been very supportive. There is, renewed interest in real estate. Real estate cycles are normally long and deep. So when real estate markets go up, they stay up for a while, is what we've seen in the past. And we've seen demand come back into the market. There is a lack of supply as well. There is not enough inventory of new homes. Prices have also risen in many pockets. And there's generally sort of more appetite for bigger homes, better homes. That's what we are seeing. Incomes have also gone up over the last few years. So real estate is a lot more affordable than it was maybe 8-10 years ago. I hope this sort of continues for some more time.
But Hitesh, it's still a bit away from the break-even on 99 acres and for the other businesses as well, right? Do you anticipate FY25 could be the year when there'll be an EBITDA break-even for these?
So our operating performance has been improving every quarter, both Jeevan Sathi and 99 acres. In Q4, 99 acres actually generated some cash for the company. So it was cash positive after a while. And losses in Jeevan Sathi also came down substantially. And if we are able to continue to execute like this for another 3-4 quarters, then of course, these businesses could break even. But a lot will also depend on competition and what other players in the market do. We continue to be confident about these two businesses. There was a point in time when we were losing 100 crores a year in 99 acres. We were losing 100 crores a year in Jeevan Sathi. From there to sort of almost break even, I think we've done a good job over the last 5-6 quarters. But let's see what the next 3 quarters have in store. We'll know only after a while. And this has to sustain for some more time for us to become very confident about these businesses.
The way I'm reading in between the lines is that it's not probably imminent in the next 6 to 12 months, but yes, the track record is right and perhaps you're moving towards that and hopefully by the end of the year or next year you should be there. But what about the EBITDA margins? They too have been on the improvement path. Street is now building in a margin profile of almost 42% for you by the end of FY25. Is that a realistic estimate you believe? Because your ad spends have also kind of stabilized a bit. What's the normalized A&P spend for you, and is 42% on EBITDA margin a possibility in FY25?
Actually, we don't target EBITDA margins. We have a budget. We've built a plan which, and a lot will depend on what happens in the recruitment business. If growth comes back to recruitment, if the business starts growing at even 14-15% per annum, then EBITDA margins should sort of stay healthy. But if Naukri continues to sort of grow in single digits for some more time, then we would not want to hold back investing in this business. We will want to continue to invest, and therefore EBITDA margins could take a hit in the short term. As far as Jeevan Sathi and 99 acres are concerned, we expect margins to get better in over the next 12 months, especially if the market continues to be buoyant.
You've definitely seen, you've said that you've seen some growth come in the IT hiring. If you could give us a ballpark figure of percentage of growth that you're seeing in that particular segment. Also, what about the non-IT hiring segment? How is that looking?
So there are 3 big parts to our business. There's the non-IT hiring piece, there's the IT hiring piece, and there is the recruitment firms who we work with. In Q4, we saw growth come back to IT, to the IT hiring business that grew in high single digits, maybe about 9-10% for us. Basically, what's happening there is that a lot of these companies are overhired, and their utilization rates have fallen because of attrition and because they've not replaced a lot of people who've left in the last 12 months. Their utilization rates are now back to where they were pre-COVID. So now if demand picks up, they'll be sort of forced to hire and replace the people who leave. So a lot will depend from here on what happens to demand for IT services globally. As far as non-IT is concerned, certain sectors in the non-IT space continue to sort of grow very, very healthily. For us, sectors like travel, tourism, construction, real estate, healthcare, hospitality, manufacturing. So growth in these sectors has been strong, and the non-IT hiring piece for us also grew in double digits last quarter. The recruitment firm business is a little challenged, and a lot of these recruitment firms, of course, hire for IT companies, and their business also taken a hit because IT companies are not hiring like they were hiring earlier.
Try to corner you a bit and ask you directly, is the IT growth in recruitment expected to be double digit in terms of billings going forward? Because that's been the trend over the last few days. And secondly, if you can give an explanation of that 12 crore exceptional loss, is it also on account of one of the investments that you had made? Because you had made some write-offs earlier as well and said that that's the bottom of that.
The IT hiring, we don't know what the future holds. Of course, the trend is, we are seeing job listings on our site improve. We are seeing more demand for IT professionals on our platform. But we don't know what the next 3 quarters will look like. One can only hope that, we've hit the bottom and from here on things will get better. But time will tell. There's an election in the US. IT hiring is more indexed to what happens in the US economy and what happens to the global economy than to what happens in the Indian economy. And let's see how that plays out over the next few quarters. We also know, for example, that demand for people in the global capability centers have been set up in India has been growing. So a lot will also depend on what happens to outsourcing to these centers in the time, and not just to the Indian IT services companies. So a big part of our business is, of course, the Indian IT services companies who hire through us, but we also get a lot of business from the global capability centers, who hire a lot of talent in India. There are now over 1,600 such centers in the country, and they employ close to 2 million people. So let's see how this plays out. The exceptional loss, we have made a lot of investments, and some of these investments are marked up, some are marked down. So it's probably that.
Just lastly, I think during the quarter there was this issue with Google wherein some of the apps were removed. Has that issue been sorted?
Yeah, that issue was resolved a long time back, within a few days.
Expected again, right? That's what I meant, because that was a 1-day, 2-day issue and I know got resolved, but nothing else is expected now, right?
Things continue to be normal,
okay.
And we have an excellent relationship with Google, and we hope it stays that way.
Okay, on that positive note, we'll let you go, Hitesh. Thanks so much for making time and speaking with us. So that's the commentary coming in. IT service recruitment seems to have bottomed out for now, trying to get towards that double-digit, billing mark for the IT services. The advertisement spends has pretty much stabilized for them, and overall recovery in the stock price as well, because they talked about an exceptional loss which was there of 12 crores. Barring that, the numbers were largely in line with expectations. We'll do one.
If you like this video, then like, share and subscribe to ET Now.